The year is 2025, and Bitcoin has just shattered another price barrier, reaching an astounding $102,000. This achievement marks a pivotal moment in the history of cryptocurrency, solidifying Bitcoin's position as a dominant force in the global financial landscape. The journey to this point has been marked by both exhilarating rallies and periods of significant volatility. Yet Bitcoin has consistently defied expectations, emerging stronger after every challenge and captivating the attention of investors worldwide. This latest milestone is not merely a numerical triumph. It signifies a fundamental shift in how we perceive value and engage with financial systems. As we enter this new era of Bitcoin at $102,000, it's essential to understand the driving forces behind this surge and what it means for the future of finance. What factors have propelled Bitcoin to such heights, and how will markets react to this new reality? The answers to these questions hold significant implications for seasoned investors and newcomers alike. Understanding the dynamics at play is crucial for navigating the exciting and sometimes turbulent waters of the cryptocurrency market. Several key factors have contributed to Bitcoin's remarkable ascent to $102,000. One significant driver is the growing institutional adoption of Bitcoin as a legitimate asset class. Major financial institutions, once hesitant, are now integrating Bitcoin into their portfolios, recognizing its potential for returns and its role as a hedge against inflation. Furthermore, increasing awareness and understanding of Bitcoin among retail investors have fueled demand. As more individuals recognize the potential of decentralized, censorship-resistant digital currency, they are turning to Bitcoin as a store of value and a means of transaction. This surge in demand is met with Bitcoin's limited supply, capped at 21 million coins. This fundamental scarcity, combined with growing demand, creates upward pressure on the price. Additionally, geopolitical uncertainties and concerns about traditional financial systems have prompted investors to seek alternative assets like Bitcoin, further contributing to its price appreciation. Bitcoin's surge to $102,000 sends ripples throughout the cryptocurrency market and beyond. For seasoned investors, this milestone represents a validation of their belief in Bitcoin's long-term potential and an opportunity to reap the rewards of their early adoption. However, it also presents new challenges. The market volatility that often accompanies such significant price movements requires careful risk management and a deep understanding of market cycles. New investors, attracted by the allure of quick profits, must proceed cautiously. While the potential for gains is undeniable, entering the market at such a high price point carries inherent risks. The broader financial world is also taking notice. Regulators are grappling with how to address the growing influence of cryptocurrencies, while traditional financial institutions are adapting their strategies to accommodate this new asset class. Predicting the future of Bitcoin, even with its impressive climb to $102,000, is an inherently uncertain endeavor. However, examining current trends and understanding the underlying principles of this technology can offer valuable insights. The factors that have driven Bitcoin's growth, increasing institutional adoption, growing retail investor interest, limited supply, and global economic uncertainty, are likely to remain relevant in the coming years. This suggests that Bitcoin's trajectory could continue its upward trend, albeit with potential periods of correction and consolidation. The broader cryptocurrency market is also likely to be influenced by Bitcoin's performance. As the flagship cryptocurrency, Bitcoin's price movements often set the tone for the entire market. However, the cryptocurrency space is dynamic and constantly evolving. New technologies and projects are emerging, each with its own potential to disrupt the financial landscape.